Welcome back, everyone. This is our gold market review for the 26th of October. The gold market surged to a second consecutive week and is now in positive territory in the current, implying some bullish interest is present among traders. Through our weekly update, we aim to investigate the most active moments for gold in the recent sessions and clarify what could be motivating traders to take action. On a general note, this report aims to overview the most important updates related to the gold market at the moment, providing traders with valuable information needed to understand the price action. As a closure, gold's technical analysis will be provided where important levels and trends will be identified. The most active day for gold in the past sessions came on the 22nd of October during the transition between the European afternoon and the US morning. Gold had initially started moving upwards, anticipating the release of the preliminary market PMI data for October. The data may have sent mixed signals, with the manufacturing figure being lower than expected while the services and composite data being higher than anticipated. Yet, after the release of the data, gold came tumbling down, basically erasing the previous hour's gains and even dropping lower. In the aftermath, two scheduled speeches by Fed officials that took place during Friday's US session may have also contributed to gold's movement. During the time, San Francisco Federal Reserve Bank President Mary Daly spoke first on Friday, highlighting the notion of high inflation readings driven by supply disruptions. Daly also explained raising interest rates would not solve supply challenges, implying this may not be the time for overconfident changes in the monetary policy strategy. Moreover, comments from Fed Chair Jerome Powell stating supply shortages and constraints pushing inflation rates higher are likely to last longer than previously expected and may have captured the market's attention. However, the Fed chair sounded more confident, saying that as soon as supply constraints subside, inflation and job growth will normalize. These comments, in our view, tend to steer some uncertainty among traders that was displayed with a notable surge and subsequent drop in gold's price. Nonetheless, as the Federal Reserve is preparing to reduce its bond buying program, some ambiguity over the future economic performance remains. This ambiguity has emerged from previous forecasts made by the Fed that were not met eventually. Under these circumstances, we could see gold's ability to be used as a safe haven coming into play, with its price remaining volatile and possibly at higher levels. In the days ahead, an interesting economic calendar unfolds for traders keeping interest in the gold market continuous. Starting on the 27th, we get the US durable goods for September, and on the 28th, we get the highly anticipated US GDP advance rate for the third quarter, along with the weekly initial jobless claims figure. On the 29th, we get the US consumption adjusted figure for September. Finally, on the 1st of November, we get the very important ISM manufacturing PMIs for October. We would also like to note the crucial central bank meetings from Canada on the 27th of October and Japan with Europe on the 28th of October. Finally, on the 29th of October, we get the G20 meeting in Rome. In our opinion, the pre-mentioned events can move gold's price and especially react to surprise outcomes. We move now to gold's 4-hour chart. This is our technical analysis. Gold remains in an upward momentum since the 18th of October. So far, this momentum has peaked on our kindly noted R1 1,815 resistance on the 22nd of October. Even though the trend has weakened in the latest sessions, the bullish interest is still evident through our RSI indicator, which is currently running across the 60 level. If the momentum is to persist further, then the next level higher could be the R2 1,835 resistance that could lead to a new monthly high. Our highest level for this report is the R3 1,855 and can be considered in a durable bullish scenario. If, however, the bears take over, then the S1 1,785 level could be tested first in our view, as it had been used as a resistance previously. Lower than that, the S2 1,770 support is noted, which was tested in the past week and held its ground as the price action bounced off it. Our most considerable support is currently placed on the S3 1,750 line, which has been tested multiple times in the first 10 days of October and has not been breached, making the case for a solid level. Gold continues to run in a larger sideways motion, currently moving between the S3 and the R2 levels, and in our opinion, this range can be used as a more short-term strategy. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. From everyone here at IronFX, wishes for solid trading.